Hey everybody, I'm Mike Desepoli and welcome to the Heritage Market Pulse for Friday, October 15th, 2021. We hope you had a great week. We're here to wrap up the market's action this week after a very quiet start to the week. A little bit of a move down on Monday. We saw the market stage a very broad-based big rally to cap the week. Markets recorded their best day since March on Thursday, and across the board we're looking to post gains of 2.5% to 3% for the week across the major indexes. So, it's funny how a lot can change in a short period of time. We sat here last Friday, markets just continued to look sluggish, they looked weak, trending lower, and we continued to tell you that we felt that as seasonality shifted, as sentiment shifted, as institutional investors reassessed the environment, we felt that this market was due for a bounce. So here we are, we got that bounce. We don't think it's over. We think there's still a long way for this market to go higher. Of course, it won't be in a straight line, but I think the markets have done a lot of good internal work under the hood. You may have not noticed it by looking at the broader averages because they didn't really move down that much, maybe a 5 to 7% decrease over the course of September and early October. But the average stock in the S&P 500 had pulled back by more than 20%. So while it sounds like a bad thing, that means that we actually had some internal correcting in this market, which is good and healthy for this market to rejuvenate itself and get ready to move higher. So obviously the big news this week was the kickoff of earnings season led by our major banks. And that's always important to watch because even if you don't own bank stocks, the banks are a really good feel for the economy. They're really part of the heartbeat, if you will, the global economy. They're involved in so many different businesses with lending practices and private banking and et cetera. So seeing really strong results for our major banks to kick off earnings season is a good sign of things to come. Next week, earnings season will kick up into full swing. There'll be many large market cohorts reporting next week, so it'll be very important to watch. We expect that we will continue to see that corporate profit growth that we think fuels any good market rally. The other news of the day was we got retail sales data from the month of September. Okay, the data always comes out about 2 weeks after the month close. And the retail sales data came in above expectation for the month of September. And there was also an upward revision from the previous report for August. So that tells us, even though there's been some warning signs, some concerns in the economy, the jobs report from last week did not look very good relative to expectations. We still see the consumer strong. The consumer is still spending money. Their level of personal savings is still very much well above where they were coming into this pandemic. So the American financial household, by and large part, is in better shape, and we think that this rally, this economy, is consumer-driven, and we expect the consumer to continue to be strong. You hear a lot of talk about supply chain issues, and that's not something that's likely to go away anytime soon. Between inflation and supply chain concerns, those are two of the main things that we've been hearing about as problems that exist in this economy. But again, when you look back at what is causing a lot of these problems, as long as the demand stays strong, we think that that's a good situation to be in. So as far as what we're watching for, we got a good bounce in the markets this week. We felt it was overdue. We felt it was coming. It was the type of rally that you want to see, right? It was led by technology. Semiconductors lead tech. Tech leads the market. We think those are the most sustainable and strong rallies. And looking under the hood of these rallies, we look at things like the volume of the market, up, down volume, how many people are buying versus selling. And really what we saw yesterday on Thursday's rally was all the signs that you want to see for a market that is ready to move higher. So again, we don't expect it to be in a straight line, but we do think the direction is higher from here. So if you have any questions, of course, reach out to us. We're always here to talk to you about anything that's on your mind. We hope you have a great Friday and a great weekend, and we'll be back on Monday with the Heritage Market Minute. Take care.